Accounting Standard S6 Revised 1994. Depreciation Accounting. Please visit our site http://icars.blogspot.com. Contact us ic@upton.com. S6 is mandatory in respect of accounts for periods commencing on or after April 1, 1995. Accounting Standard S6 Depreciation Accounting was issued by the Institute in November 1982. Subsequently, in the context of insertion of Schedule 14 in the Companies Act in 1988, the Institute brought out a guidance note on accounting for depreciation in companies which came into effect in respect of accounting periods commencing on or after 1 April 1989. Introduction. Para 1. This statement deals with depreciation accounting and applies to all depreciable assets except the following items to which special considerations apply. 1. Forests, plantations, and similar regenerative natural resources. 2. Wasting assets including expenditure on the exploration for an extraction of minerals, oils, natural gas, and similar non-regenerative resources. 3. Expenditure on research and development. 4. Goodwill. 5. Livestock. This statement also does not apply to land unless it has a limited useful life for the enterprise. Para 2. Different accounting policies for depreciation are adopted by different enterprises. Disclosure of accounting policies for depreciation followed by an enterprise is necessary to appreciate the view presented in the financial statements of the enterprise. Definitions. Para 3. The following terms are used in this statement with the meanings specified. Para 3.1 Depreciation is a measure of the wearing out, consumption, or other loss of value of a depreciable asset arising from use, afflection of time, or obsolescence through technology and market changes. Depreciation is allocated so as to charge a fair proportion of the depreciable amount in each accounting period during the expected useful life of the asset. Depreciation includes amortization of assets whose useful life is predetermined. Para 3.2 Depreciable assets are assets which 1. Are expected to be used during more than one accounting period, and 2. Have a limited useful life, and 3. Are held by an enterprise for use in the production or supply of goods and services, for rental to others, or for administrative purposes and not for the purpose of sale in the ordinary course of business. Para 3.3 Useful life is either 1. The period over which a depreciable asset is expected to be used by the enterprise, or 2. The number of production or similar units expected to be obtained from the use of the asset by the enterprise. Para 3.4 Depreciable amount of a depreciable asset is its historical cost or other amount substituted for historical cost in the financial statements, less the estimated residual value. Explanation. Para 4. Depreciation has a significant effect in determining and presenting the financial position and results of operations of an enterprise. Depreciation is charged in each accounting period by reference to the extent of the depreciable amount, irrespective of an increase in the market value of the assets. Para 5. Assessment of depreciation and the amount to be charged in respect thereof in an accounting period are usually based on the following 3 factors. 1. Historical cost, or other amount substituted for the historical cost of the depreciable asset when the asset has been revalued. 2. Expected useful life of the depreciable asset. And 3. Estimated residual value of the depreciable asset. Para 6. Historical cost of a depreciable asset represents its money outlay or its equivalent in connection with its acquisition, installation, and commissioning, as well as for additions to or improvement thereof. The historical cost of a depreciable asset may undergo subsequent changes arising as a result of increase or decrease in long-term liability on account of exchange fluctuations, price adjustments, changes in duties, or similar factors. Para 7. The useful life of a depreciable asset is shorter than its physical life and is 1. Determined by legal or contractual limits, such as the expiry dates of related leases. 2. Directly governed by extraction or consumption. 3. Dependent on the extent of use and physical deterioration on account of wear and tear, which again depends on operational factors, such as the number of shifts for which the asset is to be used, repair and maintenance policy of the enterprise, etc. And 4. Reduced by obsolescence arising from such factors as a. Technological changes, b. Improvement in production methods, c. Change in market demand for the product or service output of the asset, or d. Legal or other restrictions. Para 8. Determination of the useful life of a depreciable asset is a matter of estimation and is normally based on various factors including experience with similar types of assets. Such estimation is more difficult for an asset using new technology or used in the production of a new product or in the provision of a new service, but is nevertheless required on some reasonable basis. Para 9. Any addition or extension to an existing asset which is of a capital nature and which becomes an integral part of the existing asset is depreciated over the remaining useful life of that asset. As a practical measure, however, depreciation is sometimes provided on such addition or extension at the rate which is applied to an existing asset. Any addition or extension which retains a separate identity and is capable of being used after the existing asset is disposed of is depreciated independently on the basis of an estimate of its own useful life. Para 10. Determination of residual value of an asset is normally a difficult matter. If such value is considered as insignificant, it is normally regarded as nil. On the contrary, if the residual value is likely to be significant, it is estimated at the time of acquisition/installation, or at the time of subsequent revaluation of the asset. One of the bases for determining the residual value would be the realizable value of similar assets which have reached the end of their useful lives and have operated under conditions similar to those in which the asset will be used. Para 11. The quantum of depreciation to be provided in an accounting period involves the exercise of judgment by management in the light of technical, commercial, accounting, and legal requirements, and accordingly may need periodical review. If it is considered that the original estimate of useful life of an asset requires any revision, the depreciable amount of the asset is charged to revenue over the revised remaining useful life. Para 12. There are several methods of allocating depreciation over the useful life of the assets. Those most commonly employed in industrial and commercial enterprises are the straight-line method and the reducing balance method. The management of a business selects the most appropriate method S, based on various important factors, e.g. 1. Type of asset, 2. The nature of the use of such asset, and 3. Circumstances prevailing in the business. A combination of more than one method is sometimes used. In respect of depreciable assets which do not have material value, depreciation is often allocated fully in the accounting period in which they are acquired. Para 13. The statute governing an enterprise may provide the basis for computation of the depreciation. For example, the Companies Act, 1956 lays down the rates of depreciation in respect of various assets. Where the management's estimate of the useful life of an asset of the enterprise is shorter than that envisaged under the provisions of the relevant statute, the depreciation provision is appropriately computed by applying a higher rate. If the management's estimate of the useful life of the asset is longer than that envisaged under the statute, depreciation rate lower than that envisaged by the statute can be applied only in accordance with requirements of the statute.